Hello, traders. Merry Christmas. I hope you guys had a very merry and blessed Christmas. And as we approach the end of this year, I'll be introducing a new indicator that is free. However, these are free for the current students for both the VWAP and also the basic mastermind or the legacy strategy. I'm revamping the legacy strategy to make it, I think, a lot easier for students to learn. And so what I'm going to be introducing is a indicator called the fair value gap, or FVG. And where this originated was basically ICT. I don't know if you know that that course called ICT. Okay, ICT, if those of you who don't know, is called the Inner Circle Trader. And basically he came up with a strategy called it's basically called the fair value gap, which is FVG. Okay, see these green lines here, these are what we call the fair value gaps. Now they're green because they indicate they're bullish, right? So you see these prices bouncing off to the upside, they're not being broken. And when you take the, okay, I'll be defining how this gets broken. Okay, when it gets broken, for example, when these bars close below, right? Close, not pierce like it did here. If it closes below, it will basically say this is no longer valid. But if it remains above, that's going to still remain valid, and it's considered as a strong support if it's been there for a while, right? Look at that; it just keeps on going and going until it gets broken. But obviously, it's not broken because you see where the price is right here; it's above, right? But when it hits that spot, that's a good trade to get into. I mean, when you see the swing right here, and basically that's what it is. So in a nutshell, that's what the fair value gap is. So what I'm doing right now, the reason I have not released it yet to my students and is because I'm trying to test what time frame works best. Okay. So here's an explanation of what the fair value gap is.
The basic definition of the fair value gap: the displacement of price leaving a gap in between two candles. It's a 3-candle pattern. Let's go over the basics here, how the pattern forms. So the bottom here, you see the first candle closes, and then the second one pushes up above the first candle, creating a little gap there, and then the third candle closes, and that's the end of the pattern. So next slide here. So as you see, there's 1, 2, 3, and then there's that gap, that displacement between the candles, 1 and 3, that is the fair value gap as we know it. Now here's the next slide here. This is just an example of a bearish fair value gap. You're just going to count them backwards, 1, 2, 3, going down. All right, here's the next slide, fair value gap characteristics. All right, so obviously the fair value gap acts as support and resistance. Price will return to the fair value gap. Most of the time, not all the time. There's circumstances where it doesn't. And I've noticed that it works on all time frames, from the 1-minute chart to the hour chart.
Okay, so let's get this out of here. You can see what he says. It basically works on any time frame. So on this one, I have the 2-minute, but I have the 5-minute FVG. What I've been trading the last few weeks, and not the few weeks, the last a couple of weeks, but I really tested it on my evaluation accounts, and I'll show you a trade that I did in my evaluation that actually is going to be getting me closer to getting a few more funded accounts. So you can see here, when he talked about the fair value gap, you had to do that manually. You had to draw it manually, but in this case, this indicator draws it automatically. Again, once it gets broken, it will no longer exist there. I'm sure they're going up here. I can tell you right now, there's a fair value gap right here. Now it got broken because I can, let me see if it got broken here somewhere. The fair value gap, here's one, there's two, and there's three. So I can see where there's a fair value gap right here. And the reason it's not there is because maybe it got broken right there to the upside. There's 1, 2, and 3, and there's your fair value gap. Now, if I go through here, I'll see where it gets broken, right? So obviously, it must have got broken somewhere down here because this is basically we got cut off. Must have been during the session, right? Which is not there. So when that gets, for example, a candle that closed below here would then, this will be erased, okay? But there's your fair value gap to the upside there. And you can see how it bounced off here, right? And then you have another fair value gap right there to the downside. So basically you have a what? A channel. That's what it's doing until it gets broken. And the reason this one on the bottom is no longer there is because it must have obviously been broken. So here's a trade that I took. Okay, here's a trade that I took on Friday, and this is during the the holiday session. Now, hold on. Okay, so here's the trade I took, and again, you see, I have a 987 tick chart here for ES and basically a 1 minute chart on M&Q with a 1 minute fair value gap. Now I can have the 2 minute, which you guys have, which you guys trade, but it works just as good on that. Okay. So for example, here, I'll explain my trade here. As you can see, when it's going down here, I entered here. Let me put this here. I entered here. Why? It's bouncing off a fair value gap, which is right here. See this fair value gap right there? It's bouncing off there. And also our what is it? Our trend is to the downside. Why? You can see that we're the 21 EMA is below the 50 EMA. We're below the VWAP right there. We're below the minus 0.25 deviation right there. And most likely we'll be start breaking down here down to the what you call it, -2 deviation. That's the reason why I took a trade right here, right at the edge of that fair value gap to the downside. That's for that's for ES on the 987 tick chart. Now here on the M&Q, you see that we have another fair value gap right here to the downside. There's the edge, it came back up, pulled back, and I took it right here when it was coming down. And here's another one where it formed. You can see it's forming down. Now we have what we call the fair value gaps here to the upside. But since our trend is to the downside, I took it to the downside. And you can see here, this indicates strong momentum to the downside, the M-box cumulative delta. So anyways, that's why I entered the trade. And as you see, as this progresses, it's going to progress nicely. Now I already have 10, 19, 20 points here. My target is here around 50 points. That's a $100 trade, right? So what I did here, I think I re-entered for additional, right? So let me speed this up. And you'll see as this is going down, and let me see if I can find where I entered more contracts. I don't know if I did or not on here on M&Q. Yeah, here we go. Oh no, I entered I put my trailing drawdown right there. So this is going down, as you can see, it's bouncing off. Now it created this new fair value gap to the downside. That's why it continues going down. So let's continue here. Same thing here. It's bouncing off there as well. So you know it's going to be continue going down. And that's why I can put my runner, keep on pushing my runner down to the down so I can get more points. You can see here we're already at 5 points on ES, which is good. We're already 17 points there. Here's my target. right? But I think I put my target further down. So there's, yeah, my target's down there. There it is by the extension of the fib, right? So we continue. Look at this. We're just breaking there and probably hit the -2 deviation. That was my target. Same thing with here. We're already at 10 points here. That's already $500 trade, right? So as it goes further down, it finally hit my target. It's going to hit my target at 13 points. That's a $700 trade right here as well. Look at this, getting right to the -2. Probably hit there and hit my target there as well. So here's the outcome. You see that? And those are just basically two trades. There's the 700 one and this one right here. Basically two, let me see here, 2, 3, 4, 5 contracts. And there it is. And that was over $1,000 trade because that on ES was already 700. So it pushed me for the day is 2,151. So I'll be testing it further this week. This is a holiday, anyways, it's a holiday session, and see how it works on the 5-minute rather than on the same time frame. Okay, so again, here's like the 5-minute right here. This is not, there's no live data here, so you can see where bouncing off this this fair value gap to the downside. You can see how it's bouncing off. Now, my stop would be somewhere here where you have a swing high, right there. When it gets that, then I would be entering down here. Again, if I'm already looking at this, how many points that is. Let me bounce off right there. I put there, and there's an entry right. There's target there. That's already 23 points. You would have hit, probably you would hit your first two targets on M and Q right there. And then it comes back up. Now, depending on what here, you may want to place a trade. And again, your stop would be up here, right? But right now, what do I see here? I see the 21 EMA now crossing out. Again, you just have to look what's going on here. Not only this, but base it on the other factors, right? We have it looks like our trend is to the upside. Now, if you took this trade during this one, I'll show you down here, which is the 8:30, which is before the opening. Obviously, there was a trade right here. We break, here's the 21 EMA above, right? We could have taken a trade right here or taken a trade up here. It's bouncing off, right? This one right here definitely would have taken there. How many points is that? That would have been your $100 trade. You've been done for the day. So if that was the case, I would have taken right there. How many points did we get there on that trade? Over 82 points. So if that was, how many points is that then? It's over $100. So we're looking at what? In terms of dollars times 260 something, yeah, 164.50 per contract. Now I'm trading 5 contracts that would have been over $500 easily. You see, and how, so you see how this works, and your stop would have been down here, and you've been done for the day, and that's on a 2-minute chart. So again, I'm offering my course, like I said, at a discount. After that, I'm thinking of reducing my, increasing the price, but also reducing my time in teaching students. I'll just mostly be coaching students that I already have, and also upgrading, like this, adding more, quality indicators that help them easier for them to pass or be consistently profitable and be able to pass a funded account and be able to withdraw their money. So these are tools, like I said, make trading easier and be able to see the market easier. Again, you might as well take advantage before the end of the year, because like I said, the end of the year, I'm bringing back those prices back to the regular price. My goal for the new year is basically just be more focused on my trades. I've already been coaching students for the past more than 3 years, right? I think when this started, when I first started coaching students was basically pre-pandemic. And when was that? 2020, yeah, 2020. So been 3 years, and I've been trading over 10 years. So, I'm to the point where I just want to, I gave back what I can give back to the community of traders. And I will now basically just enjoy just trading for myself. And that's about it. Okay, so take advantage of this year-end sale. And like I said, If you don't, then I may not offer these classes anymore. You may just get maybe the non-coaching side, and on that I'll probably not coach as much. Okay. Take care. Enjoy the rest of the holiday season, and I will hopefully take advantage of the year-end sale. And I'll be trading this week, testing this what time frame I should be using this, which is better. Okay, and I'll let you guys know. Take care. Stay safe. God bless. Bye bye.